Hey everybody, Smart Silver Stacker here. We just saw a big drop in all of the major stock market indexes. As you can see here, they're all in the red. The NASDAQ down the most, down just under 5%. This is all following the announcement yesterday by the Fed that the federal funds rate is going to be moving up by half of a percentage point. And that is the largest single hike in the federal funds rate in more than 20 years. So it is significant, but you got to keep in mind that that's against the backdrop of 8.5% inflation year over year. And of course, that's the official number. That's the CPI. Real inflation probably much higher than that. So I'm not so sure that the Fed's attempt at getting inflation under control is really going to have much success with an increase of, 50 basis points. But clearly it was enough to begin taking some of the air out of these bubbles that we've seen inflated in equities over the past 2 years. But one bubble we haven't seen begin to decline yet is the housing market. However, here's a headline from the Mortgage Bankers Association from back on April 27th. Mortgage applications decrease in latest MBA weekly survey. And the Mortgage Bankers Association, they conduct this survey where they try to determine the number of mortgage applications, and they have a market composite index that tracks that. And according to this data, the mortgage applications decreased by 8.3% for the week ending April 22nd. And also the index was 17% lower than the same week 1 year ago. So year over year, a 17% decline in mortgage applications. And, housing has gotten so expensive that basically people just can't afford the houses anymore. And now the interest rates are moving up. The cost of borrowing is also moving up. So it's making things just even that much more unaffordable. So I don't think that it'll be much longer before we see the air start to come out of that bubble as well. And speaking of bubbles, we're also seeing a huge decline today in Bitcoin, down over 8%. So back down to the $36,000 level. A very significant decline in a short period of time for Bitcoin. And again, I think that this move up in interest rates, although it's not going to do much to actually fight inflation, which is the Fed's stated goal, it is going to be enough to start to let the air out of these bubbles because, Bitcoin, stocks, tech stocks especially, they are all definitely in bubble territory. And this has been inflated by the easy money policy that the Fed has had over the past 2 years, really over the past decade or more, but the past 2 years specifically, a lot of fiat currency has been created, and that has flowed into assets like stocks and like Bitcoin. You had your stimulus checks out there, you had investors on Robinhood going out and bidding up meme stocks and bidding up stocks that have no earnings. These speculative investors were hoping they'd be able to sell at a higher price to a greater fool. Well, now all of that stimulus money has been exhausted. The easy money of the Fed is drying up. Investors are coming to the realization that the punch bowl is being taken away. But one set of assets that we didn't see decline today was commodities. You can see here crude oil, gold, and silver all ended up in the green. They weren't up much. It's less than 1%, all of those assets across the board. And they were up much higher earlier in the day, and they did end up giving up those gains. But just the fact that commodities and precious metals closed the day in the green while stocks were taking such a beating is really significant in my mind. Part of the reason for this, I think, is that commodity prices have not been driven by speculation. They've been driven by things like investors seeking a safe haven or investors seeking a hedge against inflation, or they're just driven higher by fundamental shortages. In the case of oil, for example, we've got the oil embargo by the EU against Russia now, so that's going to have an effect on prices, and it's not speculation that's driving it up, it's just a fundamental shortage of those commodity resources. The Fed taking away the punch bowl, I don't think is really going to affect commodities the way it's going to affect equities. And that's why I think that this time it might actually be a little bit different. In the past, we've seen as equities have declined, like in 2008 and 2020, when we saw stocks sell off, we also saw the metals and commodities sell off along with them. But again, this time is a little bit different because last time we had a big sell-off in stocks. We didn't have inflation at 8.5%. And we're going to get the numbers for April very soon. On May 11th, we'll be getting the CPI. So we're going to see inflation, I expect, probably tick up even a little bit more. I wouldn't be surprised if on May 11th we get a CPI year over year of 9% or higher. And I think that that may be a trend moving forward. Stocks are going to get beat up if the Fed does continue to raise interest rates. And not only raising interest rates, but also they're beginning their quantitative tightening. That was another announcement that they had yesterday. Now, the quantitative tightening was originally scheduled to begin in May, but now it looks like they're going to start in June. Starting in June, they're going to be selling about $45 billion worth of treasuries and mortgage-backed securities onto the market each month. And then in September, they've said they want to even increase that rate. Stocks are tanking right now just with a small increase in the federal funds rate. How are they going to behave when the Fed starts selling assets onto the market and starts shrinking its balance sheet? Well, we're going to find out in June, but already and as far as the gold and silver price, I know, like I said, it's a small increase. Silver's still down. You know, they've even though the precious metals were up to date, they have taken a beating in the past couple of sessions. Silver today at $22.51, and to me is just a ridiculously low price. You know, we're basically sitting on the verge of World War III. Just a couple days ago that we had this guy, Representative Adam Kinzinger. He introduced a resolution that would authorize U.S. military force against Russia if Russia uses chemical, biological, or nuclear weapons. Probably only a matter of time before we see a real attack or possibly a false flag that draws us into this conflict in a real way. And if you think that the markets didn't like an increase in the federal funds rate, they're definitely going to react poorly to news of World War III. You know, maybe with the exception of a few military industrial complex stocks, defense-oriented stocks, those might do okay. But as a general rule, I think the markets are really going to react poorly as we see the situation in Russia escalate. And when that happens, I think that we might get a repeat of what we saw when Russia kicked off its invasion back on February 24th, you know, a big move up in commodities. And that'll be due to disruptions in supply lines as a result of an escalating conflict, but also as investors seek out safe haven assets in times of uncertainty. And if you think inflation is high now, you know, if we get involved in a war in Ukraine or in Eastern Europe against Russia, wars are very expensive. They're one of the biggest drivers of inflation possible. So, you know, if we do see an escalation over there, expect the Fed to reverse its current policy and expect a lot of fiscal stimulus on the part of the government in terms of just spending and printing lots and lots of fiat currency. So hopefully that doesn't happen, but I'm just looking at things as a realist. If we do see that, I expect the metals probably will be moving much higher. Crude oil especially will be moving much, much higher. Energy prices will be moving much higher because don't forget, you know, Russia is a major producer of energy. And, you know, speaking of that, I don't really think that Russia is going to suffer much as a result of an oil embargo. That is just going to be Europe kind of cutting off its nose to spite its face, because although Russia will be cut off from those Western markets, they're going to find buyers. They're going to be selling probably at a discount to India and China. And even though they'll be selling at a discount, it will be a discount to a much higher energy price. So ultimately, I don't think that their revenue is really going to be affected by this. But what is going to happen is Western economies, Europe and the US, we're going to have to contend with much higher energy prices. And that could just end up being more fuel on the deflationary fire. You know, we've got the US GDP already shrinking, the Fed raising rates, we've got supply chain disruptions as a result of this conflict in Ukraine, also as a result of China's lockdowns that are going on right now. There's a lot of things that are going to be putting upward pressure on real stuff and downward pressure on assets that have been inflated into bubble territory as a result of the Fed policy. So that's why I am still stacking silver, and I know premiums on physical silver are pretty high at the moment. I was looking around earlier trying to find a good deal, and this is the best one I was able to find over at HeroBullion.com. They've got these generic 1 kilo silver bars for just $2.89 over spot. So that's the best deal I was able to find today. Just thought I'd take a look and see what the physical market was looking like. Although it looks like they've only got 4 of these left. If you try to order 5, you get a message that says quantity requested is more than available stock. So for any of you out there who are looking for a good deal on physical silver, this is not a paid endorsement or anything. I was just shopping around today and I wanted to share that deal with all of you. So let me know what you think about this crash in the price of stocks that we saw today. Is this going to continue? Is this just a blip on the radar? You know, are we going to see stocks recover? I'd be curious to know what you have to say. So let me know in the comments down below. And if you enjoyed this video and you'd like to see more videos about gold, silver, and the economy, then check out the videos that are popping up on your screen right now. And I will catch you next time. Thank you all very much for watching. Smart Silver Stacker, out.